All right, guys, so we're on question number 3, which is on accounting for contingent liabilities, provisions, and contingent assets. It's not contingent liabilities. Again, it's contingent assets. Okay, so this question is on warranty expense. Now, guys, how do we estimate warranty? Okay, now keep in mind, you're given the sales amount and you're given that 2% of sales require replacements and 5% of sales require repairs. So guys, what's the warranty expense? Should be 2 plus 5% times by 2 million. That gives you 140,000. That is the warranty expense for the year ended 30th of June 2012. What is the entry? What you need to do is you need to debit warranty expense. You debit warranty expense, and what do you credit? You credit provision for warranty, $440,000. There you go. That's what you do. $140,000. Okay. Right. On the 31st of July 2012, business paid $25,000 to do minor repairs, which means they paid cash to do minor repairs. Now, how do we record repairs under warranty? So guys, what we need to do is we need to first debit provision for warranty. In this case, the date is 31st of July. You debit provision for warranty, 25,000, and we credit cash at bank, 25,000. On 31st of December, they engage contractors on account, which means they haven't yet paid their contractors $35,000. So what you do is you debit provision for warranty, credit repairs payable or accounts payable. Oh, sorry. There you go. Okay. 31st of May 2013, they again repaired computers under warranty using their own parts, which cost them $30,000. Now guys, since they use parts, we call it inventory. So on the 31st of May 2013, you debit provision for warranty and you credit inventory, 30,000. There you go. So that's how you handle a question on provisions. Yep. Okay. Let's move on to the next question. All right, guys. Candy Crush. Candy Crush Limited produces varieties of candy and chocolate bars. It says an action has been brought against the business by a customer who broke a tooth while eating one of the entity's chewy chocolate bars. Legal proceedings were commenced seeking damages from Candy Crush. Damages awarded against Candy Crush resulting from a court case decided on 16th of June 2020. Judge has announced that the amount of damages will be set at a future date, expected to be in September. All right. Now keep in mind the reporting date for this question is 30th of June. Now this is a question on contingent liabilities. Now why is it a contingent liability? Now let's start. Let's start with the definition of liabilities. Now we're looking at 3 definition criteria. Now what are the 3 definition criteria? A, there has to be a past event. B, there has to be a present obligation. C, expected future settlement or future outflow of economic benefits. Right, let's see if there is a past event. Yes, there is a past event, which means that lawsuit is filed against Candy Crush. And this is about present obligation. Yes, lawsuit has been filed against Candy Crush, and Candy Crush is required to make compensation payments in the future according to the lawsuit, which means they do have a present obligation. Second, what am I doing? Sorry. Okay, here it is. All right, is there a past event? Again, it doesn't matter which order you put this in. Is there a past event? Yes, lawsuit is filed against Candy Crush. That is a past event. Is there a future sacrifice of economic benefits, or is there expected future settlement? Yes, the Candy Crush will have to make compensation payments in the future, which means they will they will have to give up some of it, some of their cash reserves in the future. Okay. In order to fund, what am I doing? So yeah, it's okay. Just a minor typo here. All right, guys. So the conclusion is yes, it meets a definition of liability. It meets a definition of liability. It meets all three components of definition. Okay, meets all three components of the definition criteria. All right, now we can test it for recognition. Now, what are the two recognition criteria? A, probable future outflow of economic benefits, which means is it highly likely that they will need to make a future settlement? Yes, as you can see, the court has already decided that Candy Crush is liable, which means they're required to make compensation payments in the future. So it is highly likely that they will need to make compensation payments in the future. Now, number two, what am I doing? Sorry. Number two is there a reliable measurement? Well, since these damages will be determined in September 2020, so the judge will make an assessment of compensation payments in September 2020. The exact amount of compensation payments are not known by 30th of June. Okay, so it does not meet the reliable measurement criteria. So the conclusion is it fails to meet the reliable measurement component of the recognition test, and therefore it is a contingent liability. So guys, there are two types of contingent liabilities. There are possible liabilities, which meets both definition and recognition parts of the liability, and there are also present obligations which fail either the probable economic benefits, probable future settlement component, or the reliable measurement component. Now, this is a contingent liability. This is a present obligation which fails the reliable measurement. Yeah, that is the reason why it is a contingent liability and must be disclosed in notes. Yeah, it must be disclosed in notes to Russell Limited's Candy Crush Limited's financial statements. Okay, so it is a contingent liability which must be disclosed in notes. Okay, that is the answer. All right, guys, what we'll do is we'll move on to the next question, which is question number 4 in the next video. Okay, see you soon.